and Duncan Niederauer of the New York Stock Exchange Euronext Group, and we're delighted to have the lights back on. Francine, Duncan, you were telling me what you've learned about the prospects for global growth in your conversations here in Davos. Bring us back up to date.
All right, I'm going to try again, and hopefully the lights don't go out again, right? I think what I'm hearing from a lot of the CEOs is we've clearly turned the corner. I think they're all a little bit confused about this morning's GDP number, but I think the worst is behind us. Now we're all looking for meaningful signs of growth in the real economy. So
let's talk about emerging markets. That's what everybody says is going to attract capital in the years to come, including 2010. Couple of questions. What more do you need to do at NYSE Euronext to benefit from that shift?
I think we're already very well positioned for that shift because, you know, of the 32 Brazilian companies listed in the U.S., we've got 31 of them. Our business in China continues to increase every year. We've got more than 80 Chinese companies now, and we're growing. They're growing that business very quickly. So in places, we just had Rusal list on Euronext yesterday or a day before. So in the BRICS countries, we're very well positioned right now. So, but I do think, as other viewers as other speakers have said, that is where a lot of the growth is going to come from. So the question is, how do we harness that for the rest of the world?
Can the markets in those countries, not NYSE Euronext, not what you're doing in Europe, not what you're doing in the U.S., can the capital markets handle that kind of influx?
I think in some cases they can. In other cases, I think that's why the companies choose to have a dual listing, because the local market in many cases is relatively underdeveloped. And I think many of those companies also have global ambitions. And it's hard for them to get a global shareholder base and reach out to all their customers if they're just listed locally.
Let's talk a bit about recent market action. Volatility has been the name of the game lately. How much might it drive up trading revenue if it persists for the next 6 months, as futures suggest?
Well, if you look at what's just happened in the last couple of weeks, right, we were hovering, let's take the U.S. for example, we were hovering about 25% below where we've been at the last week or two since volatility's picked up. You're always going to get more volatility with more uncertainty, so I'm not sure I believe the futures markets yet. I think if the world leaders come out of meetings like this and give us all a little more clarity and a little less uncertainty, I think volatility ticks back down to a more normal level almost immediately.
If it persists, how much might it sabotage the IPO market?
If what persists, the volatility? I don't think volatility is our problem. I think uncertainty is more of our problem, right? I think the market levels now will easily digest the pipeline we have. We've got more than 60 companies looking to come public between now and, call it, the third quarter of 2010. And it's a pretty high-quality list. And the markets can live with the volatility. I think it's the uncertainty that might drive the market lower that obviously is the big factor.
Duncan, investors gorged on credit last year, as you know, and that helped to depress equity trading volumes. Do you see more capital flowing into stocks now, and will that trend continue if that's the case?
I suppose that should be the case, right? I mean, eventually you've got to go after some returns, and if you're getting paid virtually zero in the bond markets and some of the other alternatives, one would think you'd come back to equities. I think the challenge we've got, though, is a lot of the individual investors around the world are still saving at a rate we haven't seen before. I think they're looking for more signals that give them reason to be confident, first as a consumer, and then I think if we get them confident again as consumers, I think they'll come back to the equity market.
What impact on your business might the president's proposals to ban prop trading have, with about 40 seconds?
Yeah, minimal. And as I said on some other programs earlier today, I think it's an interesting proposal, but in point of fact, implementation's challenging. Separating prop trading from market-making businesses, from customer facilitation businesses, from principal businesses, as a student of the markets, I can tell you it all blurs together pretty easily. So I don't think it's going to have much impact, if at all.
All right, Duncan, it's been great to speak with you yet again here at the World Economic Forum in Davos, Switzerland. Margaret, that's Duncan Niederauer.